second. I'm going to share my screen here. Ooh, wrong screen. There we go. So I just want to make sure, can you guys, oh yeah, wrong screen again, hold on. There we go. Can somebody just pop in the questions, just let me know, make sure you can actually see my screen here and hear us talking. Cool, awesome, thank you guys, I appreciate it. So yes, for those of you that don't know me, my name is Dan Rosenrausch. I'm CTO here at Virtue. I'm joined by a bunch of folks today, an exciting webinar. I know taxation is always a hot topic, and of course, you know, we're not really supposed to give tax advice here at Virtue, but we partner with a few compliance companies, CSI definitely being the most popular of which, that help our partners strategize for tax situations, do things like automatic remittance, filings, everything you guys need to maintain compliance on a go-forward basis. So I'm going to be joined today. Mark Lammert is the CEO of CSI. He'll be on here running through some slides today. Also joined by Rodney Stans, who's their Director of Business Development, who will be assisting with Mark. And then when we're done with the CSI demo, we're going to go through some Vibe updates, some quick wins. We have some mobile app updates we wanted to announce. And then we're also going to be showing you in effort to align with the taxation webinar of today, a way to debundle products that will help reduce and mitigate your client's tax burden. So Charlene, who's our VP of Sales, is going to actually go through a live demo of that within Vibe so you guys can see how to do that. So what I'm going to do now is, Rodney, I'm going to hand you over control. I'll let you know when I can see your shared screen. Right. I can see your screen, but I think you might still be muted.
Okay, can you hear me, Dan?
Yep, I can. You're all good to go, man.
Okay, let me just get to my desktop here. Let's see. I just have to figure out how to get our presentation up here off my screen. Share screen. So if we hit. Okay, just trying to get to the desktop part here. Oops.
If you need a few minutes, Rodney, we can start with our part of the presentation if you guys need a couple of minutes to read through.
Why don't you start with yours and we'll get our presentation up.
That works. All right, cool. So I'm going to take over control again, and we'll get rocking and rolling with this side first, and we'll come back to to the CSI team there. So yeah, so we have some very exciting stuff on the Vibe on the Virtue front, I should say. Just wanted to basically recap where we were from last month's webinar, just as far as Q2 Vibe roadmap goes. So trying to stay true to the promise of under promising and over delivering, as well as sticking to shorter timelines and making sure that we're delivering incremental value as quickly as possible to you guys, and just enhancing the product as much as possible and automating as much of your workflows as we possibly can just to make your days easier. So again, a lot of these were ETA things last webinar for Q2. Some of them were completed, but most were just roadmap items. And as you see, we have made our way through. So electronic signatures with LNP, that was one of the ones that was delivered right after our last webinar. So that is in there. Hopefully you guys are enjoying that feature. I know it's super interactive so far from the analytics. It's looking like it's getting a lot of use. So definitely check that out if you haven't already. It's a nice seamless process. Number 2 on the list was an important thing we wanted to touch base on. So it was raised to us that that Authorize.net was actually discontinuing support for some people for ACH. So we pivoted to Stripe because of which, and we did vet Stripe to ensure that they will be able to process credit card and ACH. We lost about a week or two on our development time. We were really hoping to have that feature out May 1st, but because we had to rebuild it with Stripe, just added a little bit to the process. But we're coming along. It's almost finished. We definitely think it should be to production this month. On top of that, we also had generate invoices for retroactive months was another feature request by a lot of partners. So that has been delivered. And then a new feature which we will be demoing here in just a second is our new number ordering experience. So that has been delivered. I think that went to production yesterday. And then we also have a few other things. LMP automated update integration with Bandwidth is going to be the first one. We're going to have that late Q2. So essentially you'll get automatic updates right from the carriers from within the Vibe portal. You don't have to wait for our PM team to actually pop on there and give you those updates. And then of course, Vibe Pro beta has been closed. Vibe Pro has been pushed to production. We did not invoice our partners for it this month, but it will be a billable component most likely in June once the payment integration stuff is all done. So if you're not on Vibe Pro today, the way you can tell quickly is if you see a reports button in your Vibe portal. If you're not on Vibe Pro today and you do want to get on there and utilize all those features, please reach out to your account rep here at Virtue and we can enable that product for you. It's pretty quick and easy. And then also QuickBooks integration. Our ETA on that is June. We've already started development on that integration as well. All right, and I do want to add, if you guys do have any questions, please pop them into the questions box there in the bottom right of the GoToWebinar panel. We'd love to address them, especially once CSI comes back on and does their part. I'll make sure we can try and answer as much of those as possible directly for you. All right, some other stuff that we've launched in the last couple of weeks with Vibe, we call quick wins. You can now edit products and pricing directly on the quote. So that was heavily requested. So if you want to change the name of the product on the fly there, or add some info, change the pricing, whatever the case might be, there actually now is an edit button on each line item during the quoting experience. So you can edit that stuff in real time. We've also added, I'll show you here in a second once we pop into Vibe, a partner links icon with links to various Virtue vendor partners. So for example, CSI is in there. We have Advantage IVR, their Hold Music store is up in there. There's a whole bunch. So if you haven't seen that yet, definitely give it a look. We've also updated CSI's tax mapping guide to the latest version. So that's now uploaded in there. And we've also added tax liability reports to the reports section in Vibe Pro. So you'll only see that if you're in Vibe Pro, but it's nice. It itemizes what you owe, what jurisdiction it needs to be remitted to, and you can actually filter the dates so you can run accurate reporting. And then we also made release notes visible to partners within Vibe. So with that being said, I'm going to actually move over screens and we'll just talk about a couple of these things. So as you see down here at the bottom, the release notes are now active. So every time we push any kind of update, whether it's bug fixes, stability stuff, or new features, you will see those release notes populated directly in the portal there. In addition, we also have this partner links button. So this is what we were just talking about here at the top. So it's got some of our different partners that a lot of our clients like to partner with and find value out of, whether it's for distribution or compliance or SD-WAN, whatever the case is. A lot of good partners in here that can add value to your product. So definitely give it a look here. And then finally, we'll take a look at number ordering, do a quick real-time demo of this. It's really, really simple. There's a training video now in the Learning Center about it if you want to use that or if you need your team to see that video. But about as straightforward as it gets, all you got to do is come into here, you click place a new order, you click the account you want to deposit those phone numbers into, just make sure that that account has a NetSapiens domain in there. You select if you're searching for standard or toll-free numbers. And then, for example, if you're searching for a 973 number, you can just click on the search button there. It's going to auto-populate everything that's in our inventory. And then you can also apply filters to do some vanity searches. So if you wanted to do something like find all numbers that contain, that contain in 973 the letters fun in it, you can do that here. As you see, it'll spell out the letters for you. You can also, if you're looking for numbers that just simply end in the word fun, as you can see, you can apply those as well. And then what you do is you just add the numbers over here to your cart. You go ahead and check out. If you want to enable that number for SMS, you just check this box right here, add a little note to it. We'll just say it's for the webinar, and then you submit that order, just confirm it, and then you'll see how quick it is. So it's processing. It'll probably be completed once I come back in. So now that order is successful. And what that means is that those numbers have been ordered for you for our carriers, and they've been deposited into the PBX for you. So you can just go ahead and route them on the fly. All right. Back to our notes here, Vibe itself. One more thing, and then what I'm going to do is, Rodney, I'm going to pass it back to you, and I want to come back to us so Shar can do the debundling demo here shortly. But a couple big announcements for mobile app. I know some stability issues and quality issues have been reported on 3.0. So NetSapiens is pushing out a 3.1 version. iPhone, it should be any day. It should be out there. The release notes are actually already up on our KB. So if you're interested in seeing what those release notes are, definitely check out our KB. They're in there in detail. And then the Android one should follow right after. It's expected in June, but we just put July here just because I'm sure you guys know how especially mobile development goes, just to give that expectation there. So with that being said, I'm going to pass the reins back over to you, Rodney, if you're ready for him.
Yeah. Okay, Dan, let me go ahead and show my screen. We should be ready. Just gonna grab Mark real quick as he stepped out for just a second, but let me go ahead and show the screen. Okay, can you guys see the presentation okay?
Yep, we can.
All right, fantastic. So Mark's on his way, but I'll introduce myself here. I'm Rodney Sands with Compliance Solutions, and I'm a Director of Business Development. And just to let you guys know my past background too, I was actually a VoIP owner and had Compliance Solutions do my compliance and regulatory before I actually partnered with Mark here at Compliance Solutions and became a Business Development Director. Actually, that's why I had such a passion for his business too, because as I was a VoIP provider, we actually had to go through an FCC audit, and Compliance Solutions handled that for us, and we went through with no issues at all. And of course, it took a lot of weight off of my shoulders as a business owner. And we were good at the technical aspect. We were good at the providing VoIP service and different things that we did, some hardware and so forth. But as far as the tax and compliance, it got very complex at that point before I totally understood it, as I'm sure a lot of you guys are in the same situation at this point, because there's 40,000 tax jurisdictions across the country as far as telecom taxes, communications taxes, and so it can change based on each jurisdiction. So, and even if you're only providing service in a regional area or one particular state, it can be many different tax jurisdictions and what a city would charge, what a county would charge. And so it can get pretty complex. So, as a business owner, as a VoIP owner, instead of having to worry about that each month, I've known Mark through the industry for several years and asked him to do our tax and compliance, which he did a fantastic job. And it took a lot of that stress, day-to-day stress. And sometimes we kind of forget about it if we're just starting to get into the business. I know a lot of guys are MSPs who maybe just starting to get into the telecom piece of the business. So there's a lot of unknown territory. And Mark is an expert at all of that. He's been in the business for 35 plus years, and Compliance Solutions has been around for about 20 years. So I'd like to introduce Mark to go ahead and go through the presentation. And also, Mark, as I'm introducing you, one of the things that Dan asked was that maybe towards the end of the presentation, if we just talked a little bit about bundling services versus debundling services and what the implications are from a tax standpoint.
Okay, sounds good.
All right.
Yep. All right, so let's go ahead and just flip the slide here. Okay, so real quick background. I've been doing this stuff. This presentation that you're seeing, I put together a couple of years ago. So it said for 32 plus years. It's been about 35 now. We represent about 600 telecom clients. Growth is great. COVID-19 hasn't done anything but good stuff for the telecom industry. So, we kind of do what we call taxes and the kind of the bread and butter of what has to happen. And of course, you guys have always heard the only thing in life that's pretty much guaranteed is death and taxes, and then telecom. You got to add telecom and COVID-19. So CSI covers the taxes and the telecom. We don't have anything to do with death yet, though. So we're not gonna even entertain into the mortgage or the mortuary or underwriter business or anything like that. So we're going to stick to our bread and butter, which is telecom and taxation. The items that we handle, we do both the corporate side, which is corporate income tax and property tax, and we handle all of the telecom transaction tax side. Now, primarily, we're going to talk about transaction taxes most of today. Transaction taxes are items that you're going to put on bill to a customer. The items that go on a bill to a customer are split into 3 areas. So one of the things that you want to do, whether I'm a CPA in Missouri and in Florida, but CPAs can make you sometimes get your head to spin. And what I'm trying to try to do today is just try to make it as simple as possible and just to categorize things. And that's what a good CPA does, is they put them in different categories, different buckets, to make another word. So when you bill a customer, you're going to bill 3 different category of items to them. One item is going to be legislative branch taxes. The second item is called executive branch surcharges. And the third item are called company imposed junk fees. Okay. Now, junk fees are items that are basically like a regulatory recovery fee, a property tax recovery fee. Let's depreciate Rodney Sands here and that recovery fee. It's not a payment that you actually make to the government directly. Now, granted, I employ Rodney and I have to pay his payroll taxes, and eventually I'm going to pay some taxes for him, but not a direct item that you pay to the government. So that's called a recovery fee, and it's kind of called a company imposed recovery fee, which is another word for it is a junk fee. Not junk in the derogatory word. Basically, we know that these are items you have to pay for, and you have to hire maybe a firm like called Compliance Solutions to help keep you out of jail. So they're legit items. They're just not paid directly to a government. So the other 2 categories are items that you pay directly to government. One is I call it the legislative branch taxes. What that means is the legislative branch of the government. Go back to 9th grade civics. And think about the legislative, the judicial, and the executive. So the legislative branch of the government is the House and the Senate of the state, and then it's signed off by the governor. So it's state level sales taxes, state level communication service taxes. Now, telecom is the what you typically would call the sexy product. Okay, they tried to throw all these taxes on electricity back in the 90s. It just didn't work. It wasn't sexy enough. Okay. But this little baby right here is not, everybody says, oh, that's an iPhone. No, it's a computer. It's a computer that does voice. It has more computing power than anything that we developed up until about 1985, including all those huge rooms called UNIVACs. So this just does voice. It also does a bunch of other stuff. But millennials love these things, man. It doesn't matter if you throw 100% tax on it. Millennials are going to say, don't take away my iPhone. So it's a sexy product. Okay. So the key is, and you guys are selling VoIP and all that, and it's not quite as sexy, but it's still good. You know what I'm saying? So the fact of the matter is that the Federal Universal Service Fund, okay, which is an executive branch surcharge, is at 33.4% of a tax rate. Now that thing started out at the 4% tax rate in 1999. Need I say more? And is that going to go down anytime soon? Nope. It's going up. It's a quiet tax. It's one of those secret things that no one knows about. And quite frankly, the millennials don't care, and the press, the American press, doesn't care. You guys see it. Some other people see it, but there's like this hidden secret. Don't tell anybody. Please don't tell anybody. And some candidate for president is going to come out and state that I don't care if you make $1 or if you make $1 million, I'm going to cut your taxes by 33.4%, or by that time it may be 35%. And it's a regressive tax. Okay, it's a surcharge, but it's a regressive, and it's just ruthless. You know, it doesn't matter, again, a means testing of whether somebody makes $10 or they make $10,000 or $100,000. It's the same percent of a tax. And so anyhow, so that's the executive branch surcharge. That's federal USF, state USF, federal TRS, state TRS. The legislative branch tax, which is what I first talked about just a couple minutes ago, that's approved by the House and the Senate. That's the legislative branch of the government. And also it includes the counties and the cities. So the cities and the counties get their hands in there too. Rodney mentioned there's 40,000 different taxes out there, and that's why, because everybody, all these different government jurisdictions want to get their hands in there, okay? When you add in 911, that's another fun area, okay? So we're gonna, all right, so this is what I just kind of mentioned to you is the sign, this road sign is kind of what I'm talking about. There's all the FCC and there's the digits of USF and there's TRS and there's alphabet soup type of thing. So good luck, but there's a lot of terms in this thing. It's not bad, it's just very complex, which is why it's very difficult for me to get outside of telecom, because the more issues that are out there, the more clients we get, and we keep doing more telecom. So keep going. All right, so as I was mentioning just a second ago, the main areas that we deal with are going to be with the Secretary of State, the Department of Revenue, and the Public Service Commission, and the FCC. And so one is just corporate side, Secretary of State's corporate side, the left side. Middle side is Department of Revenue. They just want your revenues, whether it's transaction tax-based revenue or it's corporate income tax-based revenue. Then the far right side are the regulators. They regulate your business, boy, do they enjoy doing that. Whether it's at the state or the federal level, there's not that many states that regulate voice over IP, but the FCC makes up for that. They overregulate like crazy. Just file a 499 return and see if they don't have any comments. They don't have any rules, and so the FCC, you're going to see that there's, in this presentation with this slide, there's there's level 1 registration. If you look at the left side, the column, and then there's second, ongoing compliance. So we're going to register you, and then we're going to also handle your ongoing compliance to take the hassle off you. So we'll do as much and as little as you want. Basically, there's tax rating as well. What's tax rating? Well, tax rating is just tax calculations. So when you go to bill somebody, you're going to bill them for revenue rating. Okay, so for example, somebody bought 10 call paths, and they bought 100,000 DID numbers or whatever. So that you're going to say DID $1 each a month plus 100. Calculation is blank, and then you're going to take number of call paths times $15 a call path, and you're going to boom. That's called revenue calculation. Another name of that is called rating, revenue rating. Now, once we know your tax jurisdiction of where the customer is consuming this service, or maybe even billing it if you don't have any records on where they're consuming it at, you kind of probably have a credit card or something on file to say where they're at. So we can figure out the tax situs. Now, let's say the tax situs is in good old Longwood, Florida, down here where we're at. Now the next question is you got to figure out is, well, what's the customer buying? Oh, they're buying DID lines. Oh, they're buying VoIP. Or, maybe they're buying bubble gum. Maybe it's just a tangible sale, or just selling bubble gum to the customer. Based on, once we know the tax jurisdiction, we can know what the actual taxes would be based on what they buy. And that is seen at our tax lookup tool on our website that we can show you. Okay, so let's keep going. All right, so overall regulation of VoIP. Basically, in the long run, in the middle of the page, I say that there's 16 states that require VoIP registration. The way that this worked out was in the late 90s, Vonage, which basically was trying to be a replacement for traditional long distance, so that you could get it for real cheap. I don't know if you guys remember Vonage 25 years ago, 30 years ago, but they would basically be an alternative for long distance. They wanted to bypass the public switched access network of the typical telephony model. And you would get on phones with them, and sometimes they'd sound great, and other times it sounded like you were talking to Neil Armstrong from the moon. I mean, it just was like terrible. You're like, what? And then you got this echo everywhere, and then you have all this, weird stuff. So what happened is that the Federal Communications Commission lost their lawsuit on voice over IP as far as Federal Universal Service Fund charge. And so they could no longer charge the ILECs, the incumbent local exchange carriers, the baby bells, think of baby bells, because 98% of the revenue was intra-state, never crossed state lines. So the FCC didn't make any money on it anymore. Of course, what does a typical government do when they get their hand slapped? They got their hand slapped. Their tax rate was 3% and it just didn't work out. So guess what? Flip the page. Tomorrow, the tax rate's 8% because they still need the $5 million. And like a government, they just decided to increase the tax rate. You're like, holy cow. And you can't really do anything about it. So what happened is that the FCC was trying to find money. They're trying to find money all over the place. And they're still trying to find money, guys. And they're just going crazy on this 499 stuff. Well, what they did is they went to Vonage and they said, hey, we think this is 2001. We think Vonage, you aren't paying any federal USF on all that money you got coming in, and you're getting more and more customers. Tell you what we're going to do. We want that federal USF money. And Vonage basically said, you know what? That's fine. We'll be happy to bill our customers federal USF and give you the money. We don't want you to regulate. We don't want to have to go to all 50 states and get regulated by all 50 states. That's a time and a hassle. It's going to cost a couple $1 million. And now we got to keep laws for all 50 states. So the FCC put on the white hat and said, I tell you what, just like wireless in 1993 when President Clinton pushed through an omnibus budget act, and he basically took over the regulation of wireless services in 1993. Well, the federal government decided, you know what? This is what's good for the goose is good for the gander. So let's go ahead and let's regulate VoIP. So the FCC is the sole regulator of VoIP. And so Vonage paid their money. And over time, we know that the ILECs and the baby bells basically got broken up for the most part. And so Vonage got stronger and stronger, and so did these other outside players got stronger and stronger. And so the issue really comes down to now is saying, well, how are we going to make sure that there's kind of a level playing field? And so the Minnesota Public Service Commission got really mad. They decided to sue the federal government. Well, that's a great idea, but they sued them and they went to federal court. Now, what do you think the federal judge probably ruled? I think they ruled with the FCC, or do you think they ruled with the state of Minnesota? You're correct. They ruled the FCC. So now none of the state commissions can actually regulate voice over IP. They can make you register, but they can't regulate you. But they threw the states a bone, the federal court guy did, the judge. And he said, you know what? If Rodney here is the Kansas Universal Service Fund, tell you what, you and the Kansas Public Service Commission can't regulate me, Vonage, but we're going to let you tax me. You can tax me all you want. You can charge me all the taxes you want for Kansas Universal Service Fund. So they let the bone that they gave out to the states was you can tax all you want, and you can come up with all these surcharges all you want. So once again, who came out with the short end of the stick? You did, and your customers did. So anyhow, so let's go to the next thing. Okay, so here's the states. I don't want to just kind of go through slides and read off slides to you guys. I figure that, it's after lunch and you guys need a little color commentary. So pardon if I'm acting like John Madden a little bit in the NFL Sunday Night Football or whatever with Al Michaels, but I'm going to give you a little extra sauce here, a little extra mustard, okay? So here's the states that require the jurisdictions and the registrations and all that good stuff, okay? So we go to the next slide. All right, taxes and surcharges, taxes and rates. Here's a good idea. This is one from 1999 though, or 2019, October. And if we look in the middle of the page, we see that this is in Cook County, Illinois. Everybody know where Cook County is, right? It's, I didn't do a Freudian slip there. I didn't call it Crook County just because of a Freudian slip, but it's Chicago, okay? And Chicago's a great town. So anybody who's from Chicago on the phone on this thing, don't take this wrong. But anyhow, so you can see what happens here at the bottom of this slide. You can see all the different tax rates that are out there, okay? And this slide is when the federal universal service rate was 25%. If you see it down at the bottom. It is now 33.4%. I mean, they're exceeding inflation. They're doing well better than inflation. They're doing well better than the New York Stock Exchange. I mean, if you had money to invest, I'd invest in the FCC if I were you right now. So anyhow, there's taxes up at the top. You can see that there's an Illinois tax at 0.5%. There's a sales tax in Illinois at 7%. There's a city of Chicago tax. There's a Cook County. No, there's not a Cook County. There's a Chicago tax, and there's a state of Illinois tax at 7%. Now, you can't add them all up and say, oh my gosh, I add them all up and we are charging 48% taxes on our bill. No, that's not how it works, guys. So for the legislative branch taxes, which in this case are going to be the Illinois state level, Illinois, the first two, the first three, and then the Chicago and all that. That is legislative branch taxes, and so you take your revenue times those rates. So that is right there. That is approximately 14.5% plus some line item charges. The other items, the FCC, you can't just take, oh, I'm selling this times 25%. You come up with what's called a PIU, a percentage of interstate use. You got to figure out now what crosses state lines, because the FCC got their hands slapped. They can't do intrastate traffic, yet they can increase the rates all they want. So in essence, they got what they wanted, but they can't take your intrastate revenue and charge you 25% federal USF on it. So in essence, if you look at this one with a weighted average of what the actual weighted average percent is that you're probably paying here, I would say you're looking at 24% between the state legislative branch taxes and the other. So this is how it works. This is the lookup tool I was referring to earlier. We can show you anything on what you're selling. If you were selling bubble gum, it would only come out with one rate, and it would be a sales tax rate in Illinois. But you chose to do telecom. This is VoIP, and so you've got a much bigger rate. Let's go to the next here. There's another example. This is in New York City. It is not much better in New York City as it is in Chicago, but the rates are sometimes a little less on some things. But on the right side, it's going to tell you again whether it's a state, city, county, a local tax, or a federal tax. So, okay. Now we're going to go into the 499, 499Qs. Exciting topic. Let me use an analogy to kind of explain what they're trying to do here. It doesn't always come across that well, but as far as what they're really trying to do, but I'm going to try to tell you anyhow. Okay, so you all file a 1040 return with the IRS. At least we hope you do, okay? Every year. So in essence, what's going on here is the FCC is trying to manage cash flow, and so does the IRS. So let's say you get paid twice a month. That means 24 times a year. So if you are the actual employer, which a lot of you on the phone are, you know that basically one of the jobs of the employer is to collect the money from the employee and send it off to the government. So in essence, throughout the year, every time that you pay payroll, the IRS doesn't trust you, and within 3 business days, you have to make a deposit of the payroll taxes and the withholdings. So Rodney comes back to me and says he wants to withhold $12,000 this year, okay? And so I withhold, basically $500 per paycheck. So I send it on in, and then I file a 941, quarterly 941 return, and tell the Uncle Sam how much is withholding for income tax and how much is for payroll taxes. Well, the FCC kind of does the same type of thing. They make you file what's called the 499Q. Q stands for quarterly. And you have to file the past calendar quarter of what the revenue was. So in this case, the one that was due on May 1st, you're filing January through March 31st. And you're telling them all these different revenue things and stuff like that. And so from there, they decide, oh, wow, this is great. Now, the problem is they make you forecast revenue, okay? Anybody ever gone to Vegas and forecast something good and right? How about who bet on the Kentucky Derby this past weekend? And who had the right horse? And if you bet the right horse, you made a lot of money, and you're probably not going to be employed for very much longer because you made a lot of money, okay? So Americans and basically the world loves to bet on things in the future. They like to prognosticate, okay? Well, that's great. That's no problem to do that on sports. It's fun. You know, Phil Mickelson's going to win the golf tournament. Tiger Woods is going to win the golf tournament or something like that, okay? The horse race, okay? But doing that on money for what you're in a living for related to telephony. When we file the May 1st 499Q, we have to actually project revenue for July 1st through September 30th. Get that. If you got an accountant good enough to do that, or you're good enough to do that, I'm hoping that I heard from you in February of 2020 that COVID-19 was coming around the corner. Because if anybody had that, and somebody could take all the Lysol in the world, and all the Lysol wipes in the world, and all the face masks in the world, and they could have hoarded it and then sold it for a great amount of money, and they could have made billions of money. Okay, the entire world got suckered on this one. So the thing is that you don't know what the future holds, and why the FCC tries to make you project 3 or 4 months, or 5, in this case 5 months. On May 1st, you have to project July through September. For the love of Pete, how in the world are you going to do that? Well, you know, they think you can do it, and then they're going to ask you questions for why you weren't right. I just love to turn the tables on these people at some point and ask them what do they think they're going to do on whatever date, 3 months in the future, because no one knows, and it's ridiculous for them to expect that you know. So it's used to figure out how much you need to pay into the fund, because they send you a bill based on your projection. So if you think this is fun, and I got more fun for you going forward on future slides, but I mean, this is just one of those things that you're just like, primarily you're saying, I'd rather outsource this to somebody, or I'd rather have somebody else deal with this. This is like a sharp stick in the eye type deal where we're at now. And so anyhow, so we put this in there. Now the other fun thing here, they make you project revenue 3 to 5 months in advance. Do you think they actually give you the tax rate when you on May 1st when you're projecting this revenue? No, siree. Okay, they don't give you the tax rate until June the 15th, 45 days later. Guess what? You can revise that 499Q up till, you got it, June the 15th. So they give you the tax rate on the same day. On the last day, you can revise your return. In fact, they give it to you the day after. So you're stuck. Your projected revenue for whatever, and next thing you know, they come out with a rate of 38%. And you're like, oh my gosh, how in the world am I going to actually get enough money to pay these guys? Because I was projecting I had 500 customers. And in order to pay them at this point, we're going to have 600 customers. So it's not one of those things that I'm trying to tell you that you don't need to go into business. Remember, I started this whole thing out by saying this is death and taxes and COVID. And you guys get both taxes and COVID, okay? Telephony is COVID. I have not heard one case out there, Dr. Fauci or anybody, saying that anybody got COVID from doing telephony, okay? So you're in a great market, and the market's only grown. So you're in a good spot. It's just anytime you get something too good, too sexy, you're going to get taxes on it, okay? So, you know, as Ronald Reagan, President Reagan, I don't know if you remember President Reagan, he had a quick summary of government's view of the economy. So government's view of the economy is number one. If it moves, tax it. If it keeps moving, regulate it. If it stops moving, subsidize it. And that's how government looks at the economy. They look at it 3 ways. If it moves, tax it. If it keeps moving, regulate it. If it stops moving, subsidize it. And all you got to do is look around the last 10 years and see exactly what's happened in Congress and with the presidents. 3 different presidents now at this point in the last 10 years, and they all did the same thing. Okay, so this isn't political. It's just this is what they do in Washington D.C. So, all right, let's go to the next slide, please. All right, so now one of the other things you have to do is you have to be in conformity with CALEA compliance. CALEA compliance is law enforcement compliance. So if local law enforcement, the FBI or police come to you and say, hey, we think one of your customers is a sex offender, and you actually have to comply with them and give them some of your telephone records. Okay, now this borderlines privacy, and it's borderlines legal stuff. So this is one of those things you have to do to keep criminals out, but you may want to also, you know, have a lawyer kind of look at this somewhat. But anyway, one of the things you have to do is CALEA compliance. Let's go next. Okay, and more CALEA compliance, and we go to more CALEA compliance. How is that? Now this is the 499 return. This is a form of it, of what you have to do to fill it out. This is from a couple years ago, but the form hasn't changed. It's the same, so just keep clicking through it. Okay, so, and then, you know, there's some of these things that I've told you that probably are just like no-brainers, and this sign is a good example of a no-brainer. All right, now we're going into the history of the federal USF rates. Now these are the rates through part of 2021. Oh, we updated it. We updated the whole thing since 1998 at a 4%. See, I wasn't lying to you. And then it immediately goes to a much higher percent when the FCC lost their lawsuit in the second quarter of 2001. Well, maybe it was the first quarter of 2000. Anyhow, you can see how these rates are going up, and you know, they barely got into double digits, you know, in a matter of, you know, 7-8 years, and then they went past the 15% mark and no one argued, and then they went past the 20% mark and no one argued, and so here we are. You know, now some people will ask me, Mark, do you think that this social engineering fund, which is basically what federal USF is, it's social engineering, it's redistribution of monies, do you think this is ever going to go away? And I was brought into school by a lawyer at one point, and we were doing an audit. We're trying to figure out in a financial statement audit whether this company was a going concern, means that they weren't going to last more than 12 months. And they got money from the federal government for stuff like this. And they said, let me tell you something, Mark. You hear all this baloney about how Democrats and Republicans don't like each other and they're not ever get along and all that stuff. He goes, let me tell you, out of all of the states, 50 states, 2 senators a state, some Democrat, some Republican, right? There's a total of about, I think it's 42 states that are considered rural states. Did you know that New York State is a rural state? They have their hand out getting as much money as they possibly can as well. So out of that, 42 times 2, 84 senators are getting money from the federal government out of this fund. That's both Democrat and Republican. Talking about bringing home the bacon. This fund ain't going away anywhere soon. You can go to Vegas and take me on that one, okay? So there's not much Democrats and Republicans agree on, but they do agree that they want this fund, okay? All right, so we're going to keep going. This is another part of the Federal Universal Service Fund form, 499A. Keep going, keep going, keep going. This is fun. Doesn't this form look really fun to fill out? How about getting your revenues by these jurisdictions, these different regions? If you look in line 503 for 511. Man, I'm telling you what, I'm just rolling on the ground in laughter with joy every time I have to fill these things out. You know, they are a joy to do. All right, so no sarcasm there, guys and gals. All right, so here's another obvious one, obvious sign. You know, you're not supposed to enter, but you know, do not enter. All right, and then of course I've already quoted a couple things of Reagan, but the closest thing to eternal life we'll ever see on this earth is being on a governmental list. So fun. And then of course, then what are the 9 most terrifying words in the English language? And if you hear this from the USAC, which is the people who administrate the FCC Universal Service Fund, or the FCC, and you hear them say, I'm from the government, I'm here to help, you better run the other way, guys. Hold on to your pocketbook and run the other way. So anyhow, I think we have a few minutes time to go over other things. There's about 10 minutes left, I believe. So I think that's kind of the end of the slides, right? Yeah, okay. So
touch on bundling.
Okay. Okay, you
Yes,
want to touch
what we
on
wanted to do, Mark, was do just, you know, show our partners and Vibe. So if you want to just real quick, just touch on the topic of debundling, and then I'm gonna actually hand over screen control to Charlene here in a second, so she can share Vibe and kind of show how we, you know, created as 2 separate products and how it reduces that tax burden. If you want to just real quick fill in, and Char, while he's doing that, I'm gonna give you screen control if you're ready for it.
Okay, so bundling. Let me use an analogy and let me use a picture that sometimes does best here. So let's say we go to Outback Steakhouse. Okay, everybody knows Outback Steak, well, or Chili's or something. Okay, you order a meal. Okay, guess what? That's bundling. You're not ordering a steak and ordering a potato separately, and that's Ruth Chris Steakhouse. I think I've only been there a couple times. So you're going to Outback Steakhouse and you're ordering a dinner. So you get the bread, you get a salad, you get a steak, you get a potato or some veggies, and now if you get a blooming onion, you got to pay for that separately. That's a separate thing, baby. Okay, so but within the bundle, you buy a steak, you buy whatever, let's call it $20. Okay, so on that plate, the way bundling works in telecom is you have to give the highest value to the item that is the most taxed. Okay, and you give the lowest value to the item that's the least taxed. So let's just hypothetically say that those items that we have aren't just subject to sales tax. Let's say that the salad is like, let's call the salad internet surfing. Okay, internet access. Well, there are no taxes on internet access. Okay, you get the salad for free. Okay, and let's say that the bread is vertical features: call waiting, call forwarding, make my coffee, find me, follow me. You know, all that stuff, all that good stuff. Okay, and so that has very little tax. That just local, just regular sales tax type thing, vertical features. And then we go to the big kahuna, which is the steak. The steak is subject to federal universal service charge at 33.4%. The steak is subject to Florida sales tax. The steak is subject to Florida communication service tax. Whoa, you're setting it around the 28% sales tax on the steak. And that's what bundling is in telecom. Basically, you unbundle the steak entree at Outback Steakhouse, and you categorize those items. And you say, okay, which one is the least taxed, which one is the most taxed. Then once you have that, now you look at that item and you say, how much would a steak be if I just bought that a la carte, not part of the bundle? And you come up with a market value for the steak. And then you do the same thing with the salad, which is internet access. Remember, internet surfing. We say, well, what's the market value of internet surfing? And we say what it is. Now we come back together and say, well, you know what? That steak on its own was $12 in an a la carte. In a bundle, the steak is $9. Well, guess what? When you go to unbundle that and you go to package it back together, you're gonna tax map the steak at $12 at V0012, the highest rate, okay? And then you're gonna come back and you're gonna say, well, the vertical features, well, how much is call waiting, call forwarding, make my coffee, find me, follow me, blah, 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 blah. That is, that retails out at $4. But you know what? You would never buy that a la carte because you could never use it if you didn't have service, okay? So in all reality, that one is, let's say that's $2. It's kind of a freebie. And so in the bundling process, that's what you do. You go through the steps of unbundling. Then you figure out what is the highest value. Then you come up with the market value. Then you package it back together in a bundled environment and you tax map it everything so that you can actually see the pieces of the salad or the pieces of the whole thing. When you bundle it back together, it's not a soup. It's not a, America sometimes called a melting pot. Is it a melting pot or is it a salad? Well, these days in America, everybody wants to be known by where they came from rather than in the olden days, it was you assimilate, and you basically become a soup. A melting pot. So that's kind of how you handle bundling. I can go into much more detail and I could, if you want, but I just from a high level concept, that's kind of how you do bundling.
Yep. No, thank you so much, Mark. So what we're going to do is we put together, Shar, if you want to take control here and show those quotes. What we did was we put together 2 quotes, one which was essentially bundling it as one product and one that debundled it and served, just like Mark had explained there, served those items a la carte instead. So Shar, you want to go ahead and review those quotes and show how it changed the tax burden there?
Yeah, absolutely. Can everybody hear me okay?
Hey, you're all good. We can see your screen as well.
All right, well, for those of you who don't know me, again, my name is Charlene Gustafson. I am the Vice President of Sales here at Virtue. So bundling products within Vibe. And thank you so much, Mark. You did a phenomenal job of really breaking it down. You did make me hungry, by the way. I think I'm cooking a steak tonight. But it has been a frequent request amongst the community, and we will have that feature coming up this year, so stay tuned. But for the meantime, we've created an immediate workaround providing 2 products that I'll demo for you in just a moment. The workarounds really help reduce your client's tax burden by separating the communications charges with feature charges, helping to avoid communication taxes to be pulled from the entire bill. AKA, or in other words, helps make you as a provider more competitive in the market and overall help win business. So I'm going to go ahead, just like Dan mentioned, and I'm going to pull up one of our quotes, a couple quotes we put together for you right here. And we're going to start, we have the bundled and debundling. Let's start with the bundled right here. So for example, let's say, you're bundling the unlimited extension bundle, which is the category considered monthly voice service, for $24.99 per month, and we're quoting it for 20 users. Now, in the total summary listed below, you'll see that the subtotal is that total of $499.80, and the taxes altogether with it being bundled is $185.03. And what that tax breakdown looks like here, again, you can see what CSI heavily focused on, that Federal Universal Service Fund with the bundle is over $100 at $112.30, among other line items right here. What I really want you to keep in mind is this $185.03, because when I go ahead and transfer from the bundled option to the debundled option here, you're going to see where the difference takes place. So you see, instead of having the one monthly voice service altogether, we completely debundled those products. We have a feature plan, and that category is listed in the feature. And then the calling plan, which is the actual monthly voice service, are charged completely separate. The price is still the same. We are charging $23.99 for the feature plan, $1 for the calling plan. Altogether is $24.99 per user for 20 users. And when we scroll down to that total summary, you'll see that the subtotal is still the same at just around $500. However, the taxes are significantly different. Again, from that $185.03, we lowered it by over $100 for $71.90. And when we look at that breakdown here, you can see, for example, that Federal Universal Service Fund alone is significantly less as well. So this is a great workaround, again, within the Virtue billing engine to debundle these products and to also overall help reduce and mitigate your client's tax burden. Also, everything that we spoke about today, I definitely would offer and prefer, if you take this as a sign, make sure everything in your product catalogs are mapped correctly. If you've already had them mapped, keep in mind to stay on top of it, make sure it's updated every year or two. CSI, we work obviously very closely with. They put together a package for us that's pretty inexpensive to conduct a tax mapping whenever you need. And again, I think it'll help provide peace of mind. And if there's anything I can leave everybody with today, just remember Virtue is not a tax compliance company. Our goal from the beginning, and still is with this billing engine, is to enhance your billing workflow through the automation tools and services that Vibe provides. But it is very important, it's pertinent that you speak with the accounting resources like CSI to ensure your taxation is in line with current FCC guidelines and regulations. And with that, I'll leave it back to Dana to close us out.
Yeah, no, that was awesome, Charlene. Couldn't have said it better myself. So thank you so much. And thank you again to the CSI team. You guys are fantastic. And I do see questions now starting to pour in. And just for lack of time, I will, well, let's just see if we can fire off one or two here. And then the rest, I'll just export out of here and we'll get back to you guys directly. Oh, actually, these are both questions came in. So what are the tax codes for the feature plan? We can get that to you offline. Just if you can email into support, that is on the CSI tax mapping guide. I don't know if Rodney or Mark, do you want to jump in there real quick? I don't have it right in front of me, but what are I know it's the vertical features. Do you know the tax code at the top of your head?
Yeah, the vertical features are V001-15. The typical bundled plan for VoIP is V001-2. If you unbundle, then you're going to be looking at the V001 4, 5, and 6. So it is best to take it offline so we can kind of customize it for you. But without it, that's what you'll be looking at as far as the codes.
For sure. Thank you so much, Mark. And just like Charlene said, just to reiterate these things. So we are going to be coming out with a bundling feature, which is going to make everything appear like it's one line item, but separate it kind of like you saw today. But definitely use that immediate workaround like Charlene just had showed you in the live demo in the interim to help reduce your client's tax burden. And just like she said, just make you guys overall more competitive in this space. And with that said, thank you all so much for attending the presentation. Again, thank you, Charlene. Thank you, Rodney. Thank you, Mark. Really appreciate the insightful info. This session was recorded and will be posted to our KB. So if you had any team members that weren't able to watch this, or if you want to watch it again in the future, you'll definitely be able to pull it from there. And for any CSI inquiries, if you do want to inquire about their services, whether it's their auto remittance package or their product mapping, you can actually purchase that package directly from your Virtue salesperson. But if you would like to inquire with CSI, you can always email Rodney directly, just like you see here on the screen at rodney@csilongwood.com. Anyway, have a great rest of your week and upcoming weekend, guys. Take care. It was a pleasure talking to you. We'll talk to you guys on the next one.
Thank you, Dan.
Thank you.
Yep. Take care, guys. Bye.
Bye-bye.